give you the markets update now. The JSE expected to trade lower this morning, taking a breather after the all-share index hit the 75,000-point mark for the first time last Wednesday. Uncertainty on the outlook for U.S. inflation is another theme that is driving market psychology right now. For more on what is driving the latest market news, we're joined by Gary Booysen, Portfolio Manager at Rand Swiss. Gary, good morning to you. A sense, therefore, on how the markets are doing in early trade and what is happening in the London Metal Exchange.
Yeah, so it looks like there was a power outage there that has halted trading. But looking at U.S. markets last night, we had a weaker close. We had weaker markets across Europe and Asia yesterday. But our market seemed to buck the trend this morning. So we're getting a little bit of positivity starting to creep in, and it's really driven by the resource sector. So we've got the likes of Sibanye, which obviously is a combined gold and platinum producer, up over 3%. You've got the likes of Impala up around 2.6%. Kumba also recovering strongly, obviously Kumba Iron Ore up almost 3% as well. So the resource index in aggregate up around 1.3%, and that's just helping to lift the all-share index into positive territory. Industrials are under a little bit more pressure. We see some of the retailers falling, the likes of ShopRite down about 0.5%, Clicks down about 1.2%. So a little bit of a mixed bag, and I think everyone really just trading water again before the all-important U.S. inflation numbers that are due out tomorrow.
Sure. Let's talk currency now. The rand steady at 15 rand 67 against the US dollar in early trade. Talk us through what the sentiment is about the rand.
Yeah, so at the moment, there's always a lot of moving parts to our currency because it's seen as a proxy for the emerging markets versus developed market trade. So whenever you get a little bit of risk off in the market, you generally see our currency weakening. And also, it's also a currency that's very, very linked to commodity prices. What we have at the moment, we're seeing a little bit of a recovery in commodity prices today, which is helping to just keep that currency below the kind of 16 rand to the dollar level. But again, I think we're just going to trade water for most of today ahead of that all-important inflation number tomorrow.
Yeah.
We had jobs numbers out of the US on Friday. They were weaker than expected, and it showed the US labor market getting back towards full employment. So, unemployment rate in the US at the moment 3.9%, which is only a couple of points off the 3.5% 50-year low that they had. They're getting close to frictional unemployment, and that kind of fueling the story that we're going to see a little bit of wage price inflation. That's going to make the inflation numbers even worse. And if inflation numbers are bad, that means we're going to see interest rates being hiked more aggressively in the US. That will no doubt feed into the South African market as well. If people can get a little bit more yield on their dollar deposits, it tends to suck money out of emerging markets, and you might see the South African currency weakening on the back of that.
Yeah, let's talk about what the National Association of Automobile Manufacturers of South Africa are saying, and that is that new vehicle sales are likely to grow 8% in 2022 after bouncing back strongly last year. Talk us through December's numbers and what is prompting the positive outlook this year.
Yes, I think we're still coming off a fairly low base. So we did get, it was a 22.1% rebound year on year in vehicle sales numbers. But this was coming after a 29.2% slide. So, there's still some base effects that are working out of the number. And I mean, I do expect those kind of, very aggressive, numbers that are being posted probably to subside this year as we move into more of a normal environment. Part of it is prompted by an increase in the export markets as well. Looking at production as well, production numbers are also going to be up for vehicles. So overall, it does seem like our vehicle sector is recovering, but there's a long list of headwinds. So everything from load shedding to the civil unrest that we saw last year. The global supply chain worries have are starting to work through the system, but certainly there are still issues there. We've had everything in South Africa from cyber attacks on Transnet to strikes in the engineering sector. So it's been a very tough time to be in the automotive sector in South Africa. But I think a little bit of light hopefully at the end of the tunnel.
Yeah, let's conclude our conversation, Gary, with the office market, which is expected to underperform in 2022. This is despite the fact that people are going to be returning to work. More and more people, and that's according to FNB's latest report on the vaccines in the commercial property sector. Talk us through that particular sentiment.
No, I think this is a theme that's playing out, internationally and locally, and I think everyone who's working is feeling it to some extent or another. The idea that we're moving towards a hybrid environment, I think, is very likely. There's all sorts of reports, and we're seeing it also in the massive resignations that we're seeing across the US, as people are just not prepared to go and work in offices anymore. They're prepared to do a hybrid model. They'll come in for a couple of days a week, but the idea that they're going to be there 9 to 5. Like we were in the pre-pandemic era is probably not something that's going to adjust back quickly. With flexibility, obviously there's a less demand for office space, and we saw vacancy rates spiking. The national average, I think, spiked to around 18% last year, which is high, and it's going to put pressure on certainly commercial property REITs and the office sector in general. So if investors are looking for property investments, office might be an incredible time to buy, but it does seem like there's been structural changes. These office buildings are cheap, but you kind of get a sense that they're cheap for a reason at the moment, as people can embrace technology like Zoom and Skype and all the ways that we now work digitally.
Yeah, Gary Booysen, thank you very much for that markets update. He is a portfolio manager at Rand Swiss.